Welcome to Taking Control of Your Financial Life podcast, providing the simple answers to the complex questions asked about your financial future. Let's get you the answers you need about retirement, investing, asset planning, and the current market. Here's your host, Julian Rubenstein.
Hello, everyone, and welcome to Taking Control of Your Financial Life. My name is Julian Rubenstein. I'm the host of this podcast. I'm also the president of American Asset Management, a registered investment advisor located in Boca Raton. Today, I'm very happy and excited to have on our show Matt Kohen, who chairs the corporate business transactions of Zaversky, Payne, Shaw, and Lewins, as our guest today. So, Matt, welcome to the show.
Thank you, Julian. Happy to be here.
I know we talked a little bit earlier, but how about you fill our audience in a little bit about yourself and how you got started?
Yeah, sure. So great to be on. Appreciate you having me. As Julian mentioned, I'm Matt Kohen. I chair the corporate and business transactions practice at Zaversky, Payne, Shaw, Lewins in Fort Lauderdale. My practice is sort of everything that does not involve the courtroom, I like to say. So the folks who handle the litigation, going to court, they're across the hall. On this side of the building, we do everything involving the boardroom. So that would be everything from your basic contract negotiation to forming your company, advice once you have a company going, employment issues, contracts with vendors. But the meat and bones of the practice is what I like to refer to as like financing activities. So that would be anything from a startup seeking an investment or on the other side, an investor looking to invest in a company. Do a lot of mergers and acquisitions activities. So whether your company is buying another, attempting to merge with another, or you're looking to sell, we'll do a lot of that work as well. And my clients include both business owners and entrepreneurs, as well as investors, funds, whether that's private equity, venture capital, you name it. And it's really industry agnostic. So we've done everything from very high technology stuff involving fintech, even cryptocurrency, blockchain, through brick and mortar manufacturing and services businesses, all the way to real estate, which is obviously very popular here in South Florida. So it's a really wide-ranging practice, and any sort of deal or contract negotiation you may have, we would be delighted to help.
What have you done in Bitcoin, or crypto? Just curious.
Yeah, I happen to have been one of the first crypto lawyers in the U.S. for a time. So to give you some background, I had a very small Bitcoin mining company in 2011, which I sold way too early.
What was Bitcoin at in 2011?
What's that?
What was Bitcoin selling for in 11?
Gosh, probably like about $1,000, something like that. Maybe less. I think maybe closer. Yeah, probably somewhere between a couple $1,000, maybe down to the couple hundred. I can't even remember. I was involved in that industry for a really early on, where there wasn't even a price for Bitcoin. Really in the early days. In any event, I had a very small mining operation, which I sold well before things got going. I was also happened to be in the room when these guys announced that they're going to build something called Ethereum. So this has been a passion project of mine for a long time. I represented everybody from protocol developers who are attempting to create new blockchains, launch new cryptocurrencies, through exchanges and setting those things up throughout the world. I have represented service providers, investors, funds, you name it, have done quite a lot in that space, and have engaged with regulators. I've engaged with governments, both domestically and abroad. So it's been sort of a very interesting adventure in that industry over the years, and watching it expand to what it has become.
It's interesting. I mean, you can't call crypto, you can't say it's not real because people collect baseball cards, right? And baseball cards have no value. So I don't think it's right to say that it has no value, but I don't see how it ever becomes a currency like people try to think, right?
Well, I think cryptocurrency, the moniker crypto, is not a monolith, right? I think each of these assets have their own benefits and attributes that make them behave differently from one another. So I would agree with you that many of these things are probably not good currency. I'll give you Bitcoin as an example. I view Bitcoin more as digital gold, right? Gold is an excellent store of value, not the best medium of exchange. Gold is hard to carry around, it weighs a lot, but it tends to hold its value, and it's accepted by lots of different places for that value. Bitcoin is very much the same thing. It's a little bit easier to store, easier to hold, easier to carry around, but it does take some time to transact in it, just like gold does. Something like Ethereum, for example, I view more like, the gasoline to run the world computer, or the electricity to run the world computer. You're basically using these Ether tokens as gas to run a smart contract. So, think of that as sort of like a resource that gets consumed to perform these computational functions on the blockchain. Then there's everything in between. So like stable coins like Tether or USDT, those are a true cryptocurrency in the sense that they are excellent media of exchange and maybe, not necessarily should be viewed with the same sort of analysis or under the same lens as the other two assets that I mentioned.
Yeah, but I looked at stable coins as really a scam, right? At least to me, they raise what, trillions of dollars or some silly number, and people believe that it's pegged to the dollar when it isn't, right? And they're getting some crazy interest rates. The few that imploded, you had to say, of course, they were going to implode.
Well, a nuance here, right? So you have algorithmic stablecoins and you have asset-backed stablecoins. The asset-backed stablecoins have been, despite controversy in the media, relatively reliable and free from controversy. These are coins that are backed one for one by some sort of reserve, whether it's cash, property, commercial paper, you name it. That would be things like Tether, USDT, USDC, right? True asset-backed stablecoins. That's very different from the algorithmic stablecoins. That would be things like Terra and Luna, which you heard, massively blow up after some controversy. So, look, all this stuff is very new. Nobody should be putting their entire nest egg into any sort of cryptocurrency. That's probably sound advice you would give your clients. But I think it's totally fair at this point to consider this stuff for real. You have to do your own research, and you certainly need to be up to speed with how the technology works and what the risks are. But if compared to sending a wire transfer on Swift, transacting in a stablecoin is far superior, instantaneous, much easier, 24 hours a day, limited fees. Unlike I just sent a wire this morning, maybe it'll clear in 3 days. I'll probably have to field 17 phone calls by the sending and the receiving bank to confirm it. You've got to wait for business hours to do it. And so, there are a lot of real improvements on infrastructure here. But certainly in any new or nascent industry, there's going to be bad actors. There are going to be experiments that don't pan out. But there's also going to be a lot of success, just like the dot-com bubble. That industry expanded a lot, contracted significantly, and now some of the most impactful companies in the world are what they are because they survived. And it'll be no different with cryptocurrency.
Now, what do you use a stablecoin for? What's the purpose of a stablecoin?
To transact primarily. The thought here is it's just an improvement on sort of the medium of exchange. It's very hard, I think, to transact and buy goods and services with crypto when the values fluctuate so significantly, right? You have issues with pegging the value at the time of the transaction. There's taxation issues, all sorts of complications. When you have something that really doesn't fluctuate much more than $1 plus or minus a couple of cents, it becomes a lot easier to transact between individuals on a peer-to-peer basis when you have a near instantaneous, relatively stable in value instrument. And so that, I think, is the promise of these stable coins.
Right. So you buy stable coins with cash, right? With real money.
With cash or with cryptocurrency.
Okay. Yeah. And then what do you do with the stable coin at that point?
So in practice today, a lot of these stable coins are really used in connection with speculation. So they're used in sort of the exchanges where crypto assets are traded. There is some difficulty with fiat currency on-ramps and off-ramps, meaning it's difficult to get cash in. It can be difficult sometimes to get cash out.
Right.
And so a lot of these stablecoins are used to sort of move money around in connection with this speculation activity, but they're also used for all sorts of things. So, for example, we have set up a number of investment funds where the limited partners would subscribe utilizing stablecoins. We've done real estate deals where the preferred return, the distribution, would be paid programmatically and automatically with stablecoins. I've seen insurance contracts where risk premiums were paid out utilizing stablecoins. So really any type of transaction where one person or entity wants to pay another person or entity, perfectly viable to utilize a stablecoin, in addition to or in lieu of a wire transfer.
Right. See, I thought they were used primarily to buy crypto.
I think if you were to run a study, I think you'd find that is probably the majority, maybe the vast majority of the activity, but it's certainly not exclusive by any means.
Right, because I guess today, to transfer money to Coinbase and then buy crypto, it's a very involved process. You're saying if you send money to Coinbase by stable coins, then you can use it to buy and sell all day long. And you're
Yeah, I
earning.
mean, so I think Coinbase is pretty reliable. They're regulated at this point. Many banks know them, so I suspect you can probably, get a wire transfer, an ACH transfer into Coinbase or Gemini or one of these main exchanges fairly easily. But yeah, certainly you're subject to the same challenges that everyone sending a wire is. If you want to get money in there at 8 p.m. on a Friday, good luck. You got to wait till 8 a.m. on Monday, right? With a stable coin, you could over the weekend get that money in there and do whatever type of trading activity you'd like to do. So, positives and negatives, there's trade-offs with all the technologies.
Right. Just for a disclaimer, because my own clients listen to the show, I'm not suggesting that you should buy any of these things. Just as their investment advisor, I need to say that. If you're interested, call me, but this is not something you do on your own for sure. That's just
always good to get advice. And I always say, speak with a professional who's knowledgeable, do your own research. There's lots of scams out there. And the thing you got to be worried about is, remember, this is peer-to-peer decentralized technology. If you get ripped off in connection with a wire transfer, there's always a possibility if you call a bank, you could get that thing reversed. Not always, but many times you can make that happen. There's nobody to call if someone steals your Bitcoin, right? And so you do need to be extremely cautious. You need to really do your research, become knowledgeable on how to safely store this stuff, become knowledgeable about the manner in which the attack vectors come by the people who tend to do bad things in connection with scams or theft. So do your own research, but extremely interesting area. And I think probably only something that is going to become more prolific and more a part of our everyday financial parlance as time goes on.
Yeah, it's going to be interesting to see how it plays out for sure. So what is something that when your clients that you share with most all of your clients, what's one pearl of wisdom that you give them all?
So one pearl of wisdom, I guess, is slow down and think. The way that my practice develops is I usually see people when they're on the cusp of some major deal. Either they're selling a company that they've ran for several years, or they're about to make a big investment, or they're about to sign on a huge client, or maybe they're going to sign up with a big vendor to try to do some sort of expansion in services, or maybe they're soliciting a big investment from, a private equity firm or a venture capital firm, and that comes with all sorts of consequences, right? And so I always tell my clients, time kills all deals. You've got to absolutely try to get these things done as quickly as reasonably possible, right? But you should not do that to your own detriment. And what I mean by that is, let's take a minute, slow down and think. What is the risk here that we're walking into? Is there going to be a tax problem? Is there a more optimal way that we can structure this to both protect you and ensure that you get to keep and utilize as much of the money or the investment or the profit that you've got, right? So these things are extremely complicated. Take a moment, deep breath, slow down to think, and let's look at this from all angles, see if we can be creative.
Agree with you. My daughter is in law school and she's just started from her internship at Latham. So she did her first deal and it closed at 5:30 in the morning. And they were doing a press release at 6:30 a.m. And she goes, Dad, why does it always go to the last minute? And I said, I have to tell you, every deal I've done always goes to the last minute. It's unbelievable.
Yeah, never fails. It's unusual to get a deal that'll close on, before 5 p.m. on a Friday. It's always a scramble. And that's because commerce is complicated in this day and age. There's just not a lot that's cut and dry, particularly when lawyers get involved. And as much as we would like to simplify for our clients, the simple fact is we agree to things contractually throughout our day that we don't even appreciate. Every time you buy a piece of software for your business, you agree to terms and conditions. Every time you lease a copier or a piece of equipment, a vehicle, a backhoe, your phones or your computers, you're agreeing to a bunch of contractual obligations. And that may have some impact when you're trying to take on investments, sell the company, onboard some client or sign up with another vendor. And it does take time to review all that. And it does take a little bit of analysis and creativity to ensure that you can do whatever you want to do in a manner that's not going to land you in court or make you wind up in a poor situation that you didn't anticipate.
Right. Absolutely. So what is something that you know now that you wish you knew when you started?
Let me think, man. If the list is so long that I'm going to have to struggle to pick just one. But I think the answer to that would be to make sure that expectations are aligned before you get too far down a process. And what I mean by that is we'll take a transaction, a merger or an acquisition, for example, or a real estate deal, right? A lot of folks will talk with an individual, a seller and a buyer. They'll shake hands. They say, we've got a deal. And they may have agreed on the main things: price, timing, amount, type of consideration, etc. However, if you've done several of these before, or if you talk to a professional like a lawyer or a banker or an advisor, they may be able to tell you, hey, there's a little bit more that maybe we should think about before we start marching down this road. Because the worst thing that can happen is we have an expectation that we're going to do a deal. We hire bankers, accountants, lawyers, for 30, 45 days, we're all hard charging, trying to get these agreements in order, trying to get all these documents ready together to close this deal. Then we get to the closing table to find out someone didn't mention that there's a non-compete that attaches to this, or someone didn't mention that there is some quirk about the way we're handling working capital, which either reduces or expands the purchase price, or there's an exclusivity provision in this agreement that may curtail somebody's ability to do future business. So speaking to a professional as before you sort of assign on the dotted line can be really helpful. And I think that it's helpful not just because they're going to catch something that you missed or protect you from some crazy risk, but they can, if they've been to that fire before, so to speak, they can alert you to what are the things that people in commerce customarily would address, so that we can ensure that expectations are aligned and there's always a surprise here or there. We can try to limit the amount of surprises that come up after everybody is knee deep in this thing with advisors on retainer, et cetera.
Got it. So what drew you to this part of the law?
I have always been interested in the deal-making aspect of commerce, I guess. I started my career as a litigator. I was doing some interesting technology and telecom type litigation, and super interesting. Definitely was the type of stuff you learned in law school, but I was exposed pretty early on to representing a handful of startups, tech startups in Miami, right before our little tech boom over the last several years. And I just really found it electrifying. I think it's incredible to see entrepreneurs at work. I think you can learn so much about executing on an idea from watching these people. I love facilitating investments in these companies because you can sometimes receive investments from folks who have built several incredible and substantial, really history-changing companies and get their wisdom on your board of directors. You can sort of be a fly on the wall in all these situations. There's really no better way. I've done deals on everything from the manufacturing of special types of pumps to be used in naval ships, all the way through things that go into outer space and everything in between, from like pest control to ads that run on the internet. And I consider myself somewhat knowledgeable in all these industries because I've had the benefit of learning these companies from the inside out as part of our due diligence, seeing where the pain points are, seeing where they're incredibly successful, seeing who runs them good and who runs them bad and why. It's really just been an incredible ride, and every day is fascinating if you're into that sort of thing.
Okay, that's very interesting. So there's lots of deal lawyers out there. What is your unique approach that separates you from the competition?
Yeah, I would say we are pragmatic deal makers here. So what you'll find in the world is there are these huge firms who are incredibly adept at papering up, multi-billion, trillion-dollar deals. That's not really where we focus. We tend to be in the middle market and servicing small and medium-sized businesses. And so what that means is this is not, like I said, billion-dollar publicly traded companies, though we've done several of those over the years. This is often people who have built a business over their lives or the substantial part of their career, or people who are looking to get out of the 9-to-5 and acquire a business, or professional investors who run large, private equity or venture capital funds. The benefit to working with us is we've got people here who have trained up on the largest, most complex deals in the world, have encountered every issue you can possibly think to encounter. And over the years, and with that experience, we've been able to identify, what is really the brass tacks here. And what you'll find in the marketplace is there are deal lawyers out there who think it's their job to spot every little issue and bring up every little problem and try to address every little thing. I will certainly alert you to those things, but I will often give you some practical advice, which is, hey, look, is this a risk? Yeah. Is it practically something you need to tank the deal over? Probably not, right? And that advice is hard to come by because it is only something that can be given with enough experience over a vast different types of transactions, and takes sort of more of an art than a science approach in really understanding how commerce functions. So, this is not the kind of place you go if you need millions and millions of reams of paper for your deal just because you feel that makes you look sophisticated. We're here for practical, quick, efficient deal making and protecting whoever's interests is being represented by the firm in that regard.
Got it. So with all the success you've had, what's your biggest challenge professionally?
Yeah, the biggest challenge, honestly, is always going to be keeping up with the times. So I had mentioned that I have this sort of pet cottage industry cryptocurrency practice. That industry, case in point, is when I got in that in 2011, there were three cryptocurrencies or two cryptocurrencies at the time. The only one that mattered was Bitcoin. Honestly, maybe 2011, Bitcoin was probably the only one. Over the years, you wound up with Litecoin, Ripple. There were some other ones in between. But the point is, whatever that industry was then, that's not what it is now. There was no DeFi. There were no NFTs back in those days. And so understanding how to keep tabs with technology, and that it really applies to anything. Facebook is not what it was back when it launched. Amazon is not a bookstore anymore, right? So you as an attorney, you need to grow with your clients. You need to grow with the industries that your clients are in so that you can give the most effective advice whenever something comes up. Okay. That's the biggest challenge.
Well, is there anything you'd like to share that we didn't talk about?
I think we covered a pretty wide range of topics here. I think in terms of what I'd like to share, I'll give you this, is I've noticed an interesting trend, and this is something you may see with your clientele as well, which is there is this movement of everyday people who are looking to enjoy some of the benefits of the lifestyle that private equity and venture capital investors are perceived to enjoy. I'm not saying they all enjoy it, but they're perceived to enjoy it. So I'm seeing this incredible trend of folks like myself who are working normal W-2 jobs, your clientele who are, working their whole lives, saving money, diligently going about their finances. They're saying, hey, I want to change something up. I'm going to go buy a business, a small or medium-sized business, or I'm going to go invest in a franchise, which is something we talked about off the air. And I'm noticing this steep trend of normal people engaging in this activity. And so the one thing that I will share is I encourage everyone to explore this. There are a number of interesting opportunities to do this and to change your life, to change your financial position so that, their amount of money that you're managing, Julian, is significantly increasing. And I think that the world is the deal making is no longer just for the extremely rich or for the extremely well-connected or for the professional investor class. This is now for everybody. And I would just encourage anyone, if you're looking to sell your business after a long period of time, if you're looking to invest in a business or to buy a business or to engage in some type of franchise opportunity, don't do it alone. It's extremely reasonable to hire counsel like ourselves. We've got all the right people to know, whether it's you, Julian, to manage the money after they sell and things are going really well in their lives, whether it's an accountant to help them get the books together and do an analysis, and whether it's our team to assist them on the negotiation and the closing of the deal. I encourage everyone to explore this road, to go down it, reach out anytime. If we can help, I'd be happy to talk it through with you. And we would be delighted to assist anybody who is undertaking that journey in their life.
Great. On that note, what's the best way for the listeners to contact you?
So you can find me on our website. It's zpllp.com. That's the initials of the firm. My name is Matt Kohen. That's Kohen. And if you've come to our website, you'll find my phone number. You'll find my email address. Reach out anytime, and I encourage everyone to do so. We'd love to talk to you, even if you don't have a deal on the table or you're thinking about it. Reach out. We love to talk. We'll keep you apprised of all the educational events that we host and the different materials we put out that may help you in whatever your challenge you're facing. And I think that anyone who's sort of in or around the orbit of a potential transaction, whether it's real estate or an operating business, give us a visit. Follow us on social media, Zabriskie Payne Shaw Owens, zpllp.com. We would be thrilled to chat with you.
Okay. Well, I appreciate everything that you said. It was a great podcast for me. I learned a lot, and I look forward to having you back on the show.
Yeah, likewise, Julian. Thanks for having me on.
Thank you.
Thank you for tuning in to Taking Control of Your Financial Life. For more information about today's topics, please visit or check the show notes for more important information and links. Share, rate, and review this show on Apple Podcast or wherever you get your podcasts. Thanks for listening.